Good evening everyone, Ads here from Unity Trading Group. Welcome to your Thursday night update. Before we begin this evening, hit the like button, tap the subscribe button if you can, and of course tick the bell to stay updated on all of our content. We aim to stream 5 days a week. I am scraping in our stream this evening, so let's get started. A nice quick one for me this evening. Tonight we'll have a look at BTC, Ethereum, and then we'll have a look at the DXY. But BTC is the main event this evening, with our targets or our levels of demand absolutely torn to shreds, and rightfully so, with the wicks and the volume that came in overnight. Let's have a look at that quickly. So you can see immediately on the chart the volume that increased over the course of last night after the session ended. I didn't anticipate 30,000 for BTC to be something that came to light straight away, but here we are. So let's talk about it. Let's see what happened. So first things first, let's get rid of that level of demand that we smashed through. And in this instance, let's get rid of our 38.2. And while we're at it, let's get rid of the Fibonacci as well. And let's see this chart for what it really is. So we did bounce off that 30k level. We did speak about these levels last night. However, you can go back and check that video if you missed it. We did speak about the 30k level being the utmost highest quality level of demand, because it does reside on a market pivot point. That is the most relevant pivot on the 4-hour time frame, bar none, in the sense of any of the levels of demand that we have spoken about so far. That is why we bounced at that level. Make no mistake. The level at 30,000 pushed us to 60. That was the money that came into this market. It was stacked at 30,000 back here that ultimately caused this level of volume and this volatility and this movement to the upside for BTC. That is why we bounced at 30,000. First and foremost. Next thing I want to say is the people that have been messaging us in the Discord saying, is this the end? Is this the end? Is this the end? Markets do need to pull back. This is not a big surprise, to be honest. I'm not panicking. We've seen this 1,000 times before. And I do reiterate that. You can even go back on the BTC chart, look at the daily, and have a look how many times this has actually happened. What usually happens afterwards, we do get somewhat of a recovery. Markets can't slip forever, and what I mean by slippage is we can't just relentlessly move to the downside forever. It does need to come with an not equal, but it does need to come with a reaction to the upside. So in this instance, from 60,000 down to 30,000, as we've seen, this is our bearish cycle. So markets move in the sense of we move in a bullish cycle, and then we have a bearish cycle, and then we go up and down, over and over and over again, forever, up until the asset that we're trading eventually dissolves or anything like that. So this is not something that is new. Markets do have a bearish cycle before we can have a bullish one. Whether or not we continue upwards in the sense of breaking our 65k mark from here is another question entirely. But in my opinion, this needed to happen in general. What I really want to bring your attention to today is the daily time frame. So you can see immediately our market cycles, So we go from being overbought to being oversold. And then if we scroll back a little bit further, we go from being oversold to being overbought. And then we go from being overbought, or here, being oversold to being overbought. You get the idea. We go from being oversold to being overbought. We go from being overbought to being oversold. It is happening over and over again. You can see it on the chart clear as day. So whether or not you're interpreting this information in the correct way is another thing, but I'm just here to make you aware of it. In the instance of the 4-hour time frame, what happens next? So where are we going? The first things first, we always draw our fibs from left to right. We want to see our retracement levels. We have already retraced to the 38.2 so far from the extremities of the market. From swing high to swing low, we have already retraced to the 38.2. I always make the 38.2 as clear as possible because it is most likely the area that this market or markets in general will retrace to. In the sense of where are we going from here, there's two levels above us that make up the most likely scenarios if we are to continue to the upside. First and foremost, first being the 60, let's do that, and then the 50. The 61.8 makes more sense to me because we have had more liquidity at this point. 1, 2, and a number of which that have come before that. So there's a few levels that we need to really look out for. First things first though, we need to see BTC break past this 38.2, close above to really test the 50 and the 61 level. I do believe, in my opinion, and remember this is not financial advice, it's just my opinion on what is going to happen. I do think the 61.8 is a very likely possibility for a retracement. But of course, we will see what happens over the next couple of days. The weekend is very quickly approaching, so I'm not making any guarantees. Of course, this might, ping pong between 30 and 50,000 in the way of 1 and 2, all the way, until the end of the month. We shall see if this does come to light. But the two levels that are above us is the 61 and the 50 level for now. I'm not going to talk about further downwards movement for tonight's video. We've obviously got the 27.2, which resides around 21 or 22,000. I'm not going to talk about more downwards scenarios. Of course, if you want, if we do start to move to the downside, I will make everyone aware of any sort of demand levels below us in the Discord. If you're not part of the Discord, you can find a link in the description. Next one, Ethereum. So ETH in a very similar situation as BTC, in the sense that we did test some of the lower extremities or the lower levels of demand that we identified on these time frames. Just nipping up the bottom one there to coincide nicely with our price action. $2,000 was the lower extremity of Ethereum USD, and it followed BTC pretty much to a T. And you can see in this instance, even on the daily time frame, we have gone from overbought to oversold. Not oversold just yet, we are just shy, but we are in that territory to move down if we are to get to that oversold point. But it's all going to come down to BTC. Is BTC going to bounce from here and retest that 61.50 level? We could get the same sort of scenario happening on Ethereum, and that'll be the more likely scenario in my opinion. We haven't so far retraced to the 38.2, so that's going to be my most, that's going to be my most targeted level for the immediate term, the 38.2, the 29.19 level for Ethereum. And you can see on the steamroller indicator, even the RSI on the 4-hour time frame, we have reached that oversold condition, and a movement to the 38.2 is more than likely the outcome that will come for the 4-hour time frame. If we do continue to the downside from here, I'd be very concerned on if the market is going to recover in a full sense. If we're going to go back to 65 for BTC, if we're going to go back to 45 for Ethereum, it might cause a lower high scenario and then a movement further down. But not getting too ahead of myself this evening, let's focus on what's in front of us. And in front of us currently is the 23.6 for ETH. Of course, that's the area we're heading for a retest now. And of course, to the upside, we've got the 38.2 at nearly 3,000 at 29.19. So let's focus on those two areas for now, not getting too ahead of ourselves. Congratulations to those who bought relatively low. 50% discount is pretty good on the all-time high in a general sense. And if we do continue down, then you can bet yourselves that we'll be continuing to average into these markets for an anticipation of a continuation to the upside. Last and not least is the DXY. It is a regulated market, not financial advice, just ideas and opinions of us here at UTG. I left yesterday's TA on the chart, and of course it has come to fruition, or it has come to light that played out nicely at the 38.2 at 90.17, and this just plays the part of how accurate these retracements can be. I talk about fibs, and I talk about the 38, and I talk about the 50 and the 61 with so much confidence, because this is the stuff that happens with it. It is widely respected, and if you're not using it, please start, because it's going to give you the best opportunity to really either, get into movements to the downside if you're shorting, get into movements to the upside if you're longing. The retracement tool is a fantastic tool to have part of your regular arsenal if you're looking at a TA perspective. In the sense of the DXY, my TA does stand. I'm looking at the 38.2 as being a level of resistance to come down and retest that negative 27. And of course, the further extremity of the DXY being 89.14, but we'll need some more information, and we'll revisit this in tomorrow night's video on the channel. Thank you all for joining me this evening. I said it was going to be short and sharp, but we're still at the 12-minute mark, so I will cut it here. Thank you all for joining me tonight. Links are down below if you want to find out more about Gravy Train, if you want to find out more about the Discord. Of course, please join, continue the conversation in there. I'm Ads from UTG. We'll see you tomorrow.